Hi guys, welcome back to my channel once again. And how you guys doing? I know the market hasn't been really friendly, trying to push back down to visit some lows. Yeah, so on today's analysis, I'll be looking at the XY versus BTC. So before further ado, let's dive right straight into these charts. Okay, so first thing first, we're going to look at the XY. So the XY, which is US dollar currency index. So let's take a look at what is happening. So if you have been following my signal channel, you'll notice that I've been dropping some updates based on the move. So as usual, we're going to start with the weekly time frame. And for you to know what I'm doing, weekly time frame means each and every candlestick you're seeing here opens and closes every week. So as you can see on the right side, we have just 1 day 3 hours left for this candlestick to close, for another one to open. So yeah, so on the weekly time frame, let's take a look at what is actually happening here. So if you take a look at the previous video I dropped, which I talked about I think something like this, if I'm correct. Let me just do something like this. Let me see if I can get it clearly. Come in. Okay, this and this will go lower, and this will come higher, and this will still push lower this way. So yeah, what I was trying to pass across to you guys that in the previous video is this descending pattern, this I think descending Bradley wedge chart pattern here, of which we talked about the targets from here down to the bottom. Then you drag this and you drop it at the breakout here. So yeah, we're still looking at this target, but at the same time, what I keep paying close attention to is the trend. Is the trend likely to change? What is happening in the market? What should we be expecting? So that will take us to the lower time frame here. Let's see, daily time frame. So I want you guys to pay close attention to this. I want to explain this this chart pattern here. So let me remove let me see, let me remove these drawings here. Let me remove this. So let's use the 4 hours time frame, because earlier today I was looking at some moves on the XY. So let me use the full screen here so that you guys will see what I'm doing. Okay, so looking at this, this is what I think will likely play out. This on the 4 hours time frame here, and still looking at this. Okay, let me explain this very well, because I'm seeing another chart pattern here. So looking at this move to the upside, and this again moving to the upside like this. So let me adjust this very well. Take note, this is on the 4 hours time frame. 4 hours time frame. Yeah, 4 hours time frame. Let me put this very well this way. Okay, so what we have here is an ascending Bradley wedge, and I think The major thing about this chart pattern is you just have to wait for it to pick one side to break out from. But if you're looking at the chances of it pushing to the downside is like 52%, right, to break towards the downside. So how do we measure this? How do we measure this? This is totally different, because we're gonna take the breakdown from this level here and the breakout from this level here. So what are we going to use to measure our take profit level, or the level at which it will get to, and target the main moves to the downside or upside? So we're going to take it from this top here, which is what I'm doing, from here down to the bottom here. So I'm going to put it like this. So take note of this: 52% chances is going to break to the downside. And I'm going to explain why I'm still seeing maybe it's going to push towards the downside. I'm going to explain that shortly, okay? So we're looking at this, but for this to come to this level, it needs to reverse. And for it to reverse, it's still building yet another chart pattern, okay? Yet another chart pattern. And what is that chart pattern? I'm going to explain that chart pattern right away. So let's take a look at that chart pattern. This is still on the 4 hours time frame again. So like I said, whatever chart pattern you've seen, before it would be a valid chart pattern, price must have broken one level of that chart pattern. So let's take a look at this fast, very fast. So we have this this neckline, also called the support level here. So we have the left shoulder here. So I'm going to change this color to white. Okay, the next one is going to be this. So now what about the right shoulder? Is very important. So what I'm looking at here is for us to get that right shoulder, it can maybe actually stop at this level, but I'm looking at a potential pullback around this zone here. I'm looking at potential pullback around this zone here. So we're looking at range from, let's say, this high, which is 106.832, down to this level here. So we're looking at maybe a range within this level, coming within this level, consolidate, and maybe push back down to form that right shoulder. This is the left shoulder, the head, and the right shoulder. So we'll call this chart pattern head and shoulder top. So we'll likely see a top around here. So I'm going to extend this a little bit, top around here, and with that high expectation is going to come back here. So now take a look at this. I'm still expecting this to complete before we have that guarantee that this will push lower. So if it violates this level, then it's not a head and shoulder chart pattern, okay? And at the same time, it doesn't mean it's a must is going to stop within this level. It can still go a little bit higher, maybe to this level, but it must not get to the top of this head. If it gets to the top of this head, then it's not a head and shoulder top, okay? Okay, so this is what I'm just looking at. Price ranging at this level, finds that range within this level, maybe a kind of maybe rejection week to move above it, but I'm still looking at this level, very, very important level. So, and when it gets to this level, consolidate, I will get that push to the downside, then there's high probability we'll get price pushing lower. But I'm going to keep you guys up to date on this, how this will play out. Okay, so let's take a look at BTC. Fast one, don't want to spend too much time on this. Let's take a look at BTC here. So BTC has been struggling really hard to hold its level. So let's start from the weekly time frame as usual. The weekly time frame as usual. So now take a look at this, guys. I talked about an edge to edge trade setup. That was we're looking at the doubled cloud settings. I'll come back to that in a bit. Okay, so let me just remove this. Let me just remove all this so that we would have a fresh layout here. So now take a look at this. I'm still going to explain what is gradually forming on the XY here, and we'll have two scenarios here. First of all, let me use the Ichimoku here, and I talked about something here. If you guys can still remember, I said whenever price is inside the cloud, it's not a tradable zone. Okay, if it is inside the cloud, it's telling you wait for this price to move above the cloud. Is very, very important. Once price is inside the cloud, there's high probability to push back lower. And as you can see clearly here, take a look at this edge here. You can see this edge here. Price is finding it difficult to break out above this. Okay, so in a way, yes, we've had this this in and out range, up and down, and the rest, but at the same time we want price to move out. We've gotten the future cloud is bullish. We want the TK to cross bullish again, and we want the Chico span, which is the green EMA at the back, to move above the price and above the cloud, which is very, very important. So once all these metrics align together, then we'll have that bullish push to the upside. And at the same time, we are still gradually seeing some form of consolidation within this range, within let me see, within this range here. So we can just say within this range here, and this low range here, which is very, very important. Okay, and at the same time, what I don't want to see, what I really don't want to put more emphasis on this, but I just have to do this. Okay, on the daily time frame, I'm still seeing head and shoulder top, which is what I don't know what will happen, but I keep telling everyone, just because you've seen a bearish chart pattern doesn't mean that okay, this is going to dump heavily. No, what you should wait to confirm is what will this chart pattern push lower, price push lower below this horizontal support, and confirm this move to the downside. For this to confirm its move to the downside, the body of the candlestick must violate this, and yes, and this. So why am I pointing at this? 1, 2, 3. They are called psychological level of resistance and support. Okay, that these levels, why I call it psychological levels, is because that is where traders have it at the back of their mind that when price gets to this level, it's high time we buy, or it's high time we short. Okay, so there is like a memory that has been laid down here, a memory that people have like in the past, saying that when price gets to this horizontal level, it's time to take a drastic decision, either to open a long or to open a short. Okay, so it will find it difficult to break through this level and push lower. So once it breaks through this level and closes below it, then there's high probability we're going to test 20k. So the measurement to that is using the high from the top of the head down to the neckline. The neckline is also called the support. Then we'll drag this and drop this here. So we're looking at 20k. Okay, but we don't need to panic now. What we should pay close attention to, they are: number one, will price get to this level? If it gets to this level, will it break through this support? And number two, on the weekly time frame, will price next week break out, close this way and break out above the cloud? Once price break out above this cloud, it is called the Kumo breakout, Kumo bullish breakout, and we're gonna see some bullish push to the upside. So take note of this. Once the DXY is pushing lower, maybe after forming the head and shoulder top, then we should be expecting some form of reversal back to the upside. Okay, let me see if I'm not forgetting anything here. Yeah, I don't think I'm forgetting anything here. Okay, so that's just what I wanted to share with you guys. If you have not joined my Signal channel, please check the link in the description below. You would see that and it will take you straight into my General Signal channel. And I also have a private forex and stocks group as well, where I drop consistent signals free for those that trade stocks and forex. Okay, and later this week on Sunday we'll be having a live section for only those that trade forex and stocks, more like what we'll be doing every Sunday evening. Okay, so if you have not joined, do well to DM me, please. You would see the link which will take you straight to my DM. You can do it to reach out to me and let's talk about it. Okay, I'm not charging a dime for this. Okay, if anyone DMs you requesting for a dime, please, I'm not the one. You can actually block the person. Okay, so like, share, share with your friends. Tell me what you think about this video, and I'll try my best to continue to update this. So guys, stay safe, happy trading, and goodbye.